Let's take a look at some articles on Bitcoin from this week's article on Brave New Coin. So the Bitcoin article is always a big one. It's a long one. It's jam-packed with information. Bitcoin is the original, the OG, the genie that came out of the bottle 10 years running. There's always the most to say about Bitcoin and Ethereum now, just because of how robust the ecosystem is, the amount of resources available to analyze the chain, that sort of thing. It's a proof of work coin, 10-minute targeted block times, 21 million total coins to ever exist, 1.8% inflation. The lowest that I'm aware of, proof of work inflationary, disinflationary chain, however you want to think about that. Less and less BTC are being minted every day. Just had a halving a few months ago. So if we look at the hash rate and the difficulty, a lot of the stuff I talk about in the article isn't like flashy, won't get a lot of attention, but it's incredibly important. And this is one of them. Hash rate just keeps increasing to all-time highs, all-time highs, all-time highs. So long as we keep getting ASICs produced, manufactured, released, technology will continue to get better, hash rate will continue to increase, economies of scale will gobble up the ASICs, paying for overhead costs, deployment of ASICs, staff, that sort of thing. Arguably, this is a weakness of proof of work that wasn't initially foreseen by Satoshi, in that, wow, this thing's going to be so valuable that people are going to just spend money to mine it forever, and the technology is going to keep getting better and better and better. So it's definitely a weakness from a centralization point of view, because basically the richest entity or few entities at the end of the day, years from now, are going to be the majority hash rate. Luckily, there aren't one or two interested parties. There are hundreds of interested parties geographically all over the world who are super interested to keep the network decentralized. The main region for mining is probably China, a few other places. Essentially any place where there's cheap electricity, alternative energy sources, hydro, that sort of thing. Anywhere where you can get electricity down to 4 cents per kilowatt or less is the ideal place to mine cryptocurrencies. Like I said, block time 10 minute is the target, and you can see we're way below that. And this is what happens when hash rate increases before the difficulty adjustment. So we are definitely in an outlier quickly here as far as 9 minute, just over 9 minute block times. Once we get down to 8.5 or 8, then we're in mega ASIC deployment territory, in that a lot of ASICs came online very quickly. If we look at transactions and average transaction sizes haven't really changed over the past year and a half. Transactions have declined since mid-2018, when they were essentially at an all-time high parity with 2018, 2017, somewhere in there. But they're holding around 325,000, and they've been all over the place. Some of this was mining, some of this was price volatility. And I don't really know what the future looks like for transactions per day on BTC, because as the network gets better and better at scaling the transactions, batching the transactions, essentially sending a bunch of transactions at once as opposed to sending each transaction individually. We may never see 500K transactions per day just because of scaling. So this is a metric that doesn't tell the full story at face value, because you have to look at average block size, you have to look at batching, SegWit, all that stuff. So this doesn't look, this looks mediocre at best, right? Because transactions per day increased from 2014 to 2018, dropped with price in 2018, recovered in 2019, and now price is basically at the 2019 highs, and transactions per day haven't really caught up with previous transactions per day. But I don't think it's as bearish as it looks, I guess. Not that it looks bearish, but it doesn't look super bullish, clearly. This is the Mempool, the number of transactions waiting to be confirmed. This is over the past few months. You can see there's definitely peak times where transactions are being consolidated, most likely. This blue is transactions sent with no fee or little fee, typically exchanges or custodian entities, just consolidating wallets, that sort of thing, transactions. We really haven't had much of that lately. So in general, the mempool has been pretty empty, which is great. You can send a transaction. It's not expensive. It arrives when you expect it to arrive, that sort of thing. If we look at transaction fees, they've certainly increased slightly over the past few months. Block sizes continue to push past 1.2 megabytes. 2 to 4 megabytes is the theoretical limit. with SegWit, depending on how the transactions are sent. So we have a ways to go to hit that ceiling again. But it's a good sign that we increased the block size and have continued to fill that excess capacity. It's not like we're increasing block size for no reason. The demand is definitely there and has continued to be there throughout the year. If you look at NVT, an inverse metric of economic utility, and active addresses. Now, active addresses are much more impressive than transactions per day in that they are at multi-year highs here, quickly approaching the 2017-2018 all-time high. Active addresses are addresses that have changed in value over the previous day. And this is a 30-day monthly average. So this isn't, this isn't daily averages. This isn't weekly averages. There's a very clear trend here, pretty much since the middle of 2018, where active addresses have been increasing. Very close to 1 million. They're at like 98,000, sorry, at any given time lately. NVT is a bit of a weird one because you see this trend line increasing since 2017, and it says in a vacuum that on-chain activity has been decreasing relative to market cap, which could be possible, but again, this doesn't factor in scaling initiatives and batching. Doesn't factor in inflation, so it's not perfect by any means. I would much rather see this decreasing than increasing, certainly, but much like transactions per day, I don't think it's as concerning as it looks in that there's clearly a bearish divergence here between price and NVT, because if NVT is increasing, that basically says your price is overbought and either activity needs to increase substantially or market cap needs to decrease substantially. So this is another metric I don't really take too seriously. If we look at MVRV, this one I like a lot. It's another one of these on-chain inverse metrics. And if you just compare it to price highs and lows, buy zone, sell zone, and it highlights the potential upside as well as where you should think about selling in a bubble, that sort of thing. So we're still at a healthy zone and not in the buy zone, not in the sell zone, just cruising on the low side of this. So to me, this is a lot more illuminating than NVT based on realized cap and not just on-chain activity. If we look at open interest in futures volume or open interest in volumes on CME Bitcoin futures and backed Bitcoin futures, again, something else that maybe isn't highlighted enough at how high these open interest and volumes have been over the past few months. On CME, open interest is at an all-time high. Volume came close to an all-time high, but tons of activity in the legacy market for CME on the cash settled futures, and then for backed, much smaller than CME. I mean, CME is in the nearly $1 billion volume on the regular, whereas backed is still sub 200 million basically. But still, they've had tons of activity here in both physically settled and cash settled over the past few months. So that's always a good thing to see. Onboarding is great. Active addresses is great. Increased interest in trading activity. All those things are great. You don't want your chain to die in the dark if you're bullish. All right, let's take a look at some technicals. This is a moving average multiplier. So down here in the green is a 2-year moving average. And the red line is the multiplier, so 5x that moving average. And the white line is just the middle median between the two. This is log scale, that's why it looks kind of goofy. But the point of this indicator is to highlight buy zone, sell zone. And just like MVRV, we aren't in buy zone or sell zone. We're still closer to the buy zone than the sell zone. Upside's around 24K plus, and that'll keep increasing as price moves up, if it moves up just like it did throughout 2016, 2017. So plenty of upside here. Looks great from a high time frame trend. This is the daily 5200 EMAs, VPVR, yearly pivots, Bitfinex long shorts, volume down here, and RSI. So really the big thing is we're above all of this volume for the most part on price. So there's no like overhead resistance that we're about to bang up against or anything like that. We're not below 6.5, we're not below 8.1. These are all big supports at this point. We're still above the 200, the 5200 cross is still bullish. All these things suggest continued bullish momentum until proven otherwise. So until this crosses bearish, this 5200, if it does, until we're below 8.1, those would be the things I would look for if I was bearish. Longs and shorts, not really much to talk about here. It's like 85% long. Shorts have come off quite a bit in the past few weeks. No bullish or bearish divergence here, but if we do get a lower low, I would look for a bullish divergence. But the buy zone is like 8-1, if we get that low again anytime soon. But overhead resistance is like 13K, 18K, local high, local high, local high, that sort of thing. Pretty easy, straightforward, horizontal support resists there. If we look at the cloud, it's a bit of an indeterminate trend, sort of no trade zone. So there's tons of examples just on this view of the daily of the variety of cloud trades you can take. What you want to see is this excellent trend continuation with Tenkan bounces. That's super strong. Occasionally you'll get a Kijun bounce, cloud rejection, and then continuation. Occasionally you'll get a Kijun bounce attempt and then trend reversal. So we kind of have none of that right now. We're just sort of in no man's land. Ideally, what we're looking for is this situation where we get this TK cross recross over the next probably month is what it's going to take for that to happen. This cloud may even cross bearish, which is actually a good thing if you're looking for very clean signals, because just like it crossed bullish bearish here, or bearish and then bearish again, the signals are going to be super clean if we get double Kumo twists, for example, bearish and then bullish. This twist preceded any of this down move and was telling you, be careful of being long here. That's what I'd be looking for in the immediate near term over the next few weeks. But over the next month, if this pops back above a cloud again, that's a super, super strong long entry signal. Then lastly, if we look at the weekly cloud, this is really the ultimate litmus test for where we are in the trend. Because if it doesn't look like it did in late 2016, where we have TK lines above cloud, cloud is bullish, price is above cloud, lagging span, this green line, above price above cloud, then we're not as bullish as we could be. So what are we right now? We're in the cloud. Again, it's indeterminate. The issue with being in the cloud is that price can essentially go anywhere or do anything. It may complete this edge to edge. In this case, it would be 8-1, 8-2, something like that. It may go halfway through, bounce back up. That's the issue with this trade here, is the indeterminate, undecided nature of it. But into 2021, by October, maybe not October, by November, December, we should know very clearly, is this a 2016 situation, 2017 situation, or is this a 2018 situation? Are we falling below cloud or are we rising above it? Are we falling below support? Or are we rising above resistance? That sort of thing. So it's still a bit of a wait and see. But as far as support, I like 8-1, I like 7-5 if we decide to reject 10K. But as long as we're holding above 10K right now, I feel super comfortable on the long side. I feel super comfortable expecting continuation. So really everything looks pretty good. The support we had at 10K is quite impressive considering ETH got rejected very strongly and hit some violent lows there over the past few weeks. But overall fundamentals look great. Hash rate looks great. On-chain metrics look great. All this is leading to a very exciting potential Q4.